Welcome back to the channel, everyone. My name is Sam, and if you're new here, I hope by the end of this video, you'll hit that subscribe button. Now, over the last few months, the conversation around stablecoins has been heating up. And let me tell you, this is only the beginning. I've always said stablecoins are essentially tokenized dollars on chain, but it's bigger than just the US dollar. We're now seeing euro-backed stablecoins, and soon we'll have tokenized pounds, yen, and more. Australia has already introduced its digital dollar on-chain, and this trend is only accelerating. What does this mean? More fiat currency is moving on-chain, increasing the volume and value tied to stablecoins, which in turn fuels the crypto market. Now, here's something that really stood out to me. A post from Bitwise's CIO quoted US Treasury Secretary Scott Bent, who said, "We will keep the US as the dominant global reserve currency, and stablecoins will be a key part of that strategy. However big you think stablecoin assets under management will get, you're probably thinking too small." That's a bold statement, but it makes sense. If stablecoin AUM reaches multiple trillions, what does that mean for the broader crypto market? It opens the floodgates, driving more liquidity and tokenization into the space. We're talking trillions of dollars flowing in. And this isn't speculation. Ripple called this years ago. Back in 2022, they put out a post stating, "The global stablecoin race is on." And even then, stablecoins were moving $1 trillion per month in trading volume. Fast forward to today, we see how that prediction played out. The XRP ledger was highlighted as the ideal blockchain for stablecoin initiatives. And now we're seeing stablecoins like RLUSD gaining traction. Currently, RLUSD sits at roughly $7 million. Not huge compared to the giants, but it's climbing. The top 5 stablecoins already command billions each, with PayPal's stablecoin nearing $791 million. I wouldn't be surprised if RLUSD breaks into the top 5 by year's end. The overall stablecoin market is massive, currently valued at $235 billion. And if trends continue, we could see that number double by year's end. The reason? Stablecoins aren't just for crypto traders. They're being used for everyday transactions, remittances, payments for goods and services, you name it. The scalability of this use case is virtually infinite. And speaking of growth, Bloomberg Crypto recently reported that Circle's head of global policy discussed World Liberty Financial's plans to launch a stablecoin. But here's the real kicker. If you didn't already know, Trump is backing a stablecoin. That's right. The Cobby letter confirmed this, and I'll break that down in a moment. But the key takeaway here, there's growing bipartisan support for stablecoin legislation, and that's a game changer.
World Liberty Financial is getting into stablecoins with the plan to launch 100% backed by short-term treasuries, dollar deposits, and other cash equivalents. What do you think about this project? Certainly appears to be a competitor to USDC.
Well, I think one of the interesting dimensions, of course, of impending legal and regulatory clarity is that this market would enjoy a lot of competition. At some point in time, obviously, our business model at Circle, in some respects, has defined the basis of what is the legal standard emerging here in the United States and certainly the regulatory standard around the world. But you know, the movement of money and the movement of dollars is trillions of dollars of economic activity. Mm-hmm. It's one of these domains that would welcome competition. And I think it should be very broadly encouraging that World Liberty Financial joins our ranks and other companies would also participate broadly in this market.
But I would think there's competition and there's other companies, and then there's competition by companies that are closely associated with the President of the United States. And that could be a little different. Is it different?
Well, look, digital dollars in the broadest sense should enjoy and be digital representations of the full faith and credit of not only the U.S. economy, but trust in the banking infrastructure underpinning this market segment. And for the better part of the last many years, crypto policy in the United States has been defined by a policy of gradualism. And so one of the benefits that this White House has brought to bear, not only with naming crypto czars, but also in sort of mobilizing Congress and the Senate, is a world in which we have legal and regulatory clarity upon us. The Genius Act and the markup of the Genius Act enjoyed bipartisan support. Members of the Senator Mark Warner, as just one among many, switched sides and voted in favor of this markup. And I think the markup that we'll all watch next week on April 2nd will also, I think, continue to show Democratic support growing for a principled set of regulations here.
So let's talk about the big picture. If the president of the United States is backing a stablecoin, that's a clear signal that regulation is coming, and fast. This move is likely to accelerate legislative discussions and push stablecoin regulations to the forefront. Now let's get into the details of the announcement. World Liberty Financial recently introduced USD1, a stablecoin 100% backed by short-term US Treasury bills, US dollar deposits, and other cash equivalents. It will launch on both Ethereum and Binance Smart Chain, maintaining a 1-1 peg to the US dollar. This move isn't random. It's part of a broader strategy, which I'll explain in a second. But first, there's another major player entering the stablecoin race, Fidelity. Yes, the $16 trillion asset management giant is launching its own stablecoin. Going back to Ripple's 2022 statement, the global stablecoin race is on. They were ahead of their time, and now we're seeing that play out. A recent post by Bitward Invest's CEO outlined Trump's strategy. Trump's crypto play isn't about Bitcoin, it's about the dollar. He's using stablecoins to sustain US debt demand and cement the dollar's dominance. Tether has almost replaced China as a major US debt holder. This move paves the way for stablecoin regulation, benefits both Trump and the crypto market, and reduces reliance on foreign debt buyers while strengthening the US dollar's global reserve status. This explains why World Liberty Financial's stablecoin launch seemed to come out of nowhere. It's about pushing stablecoin legislation forward. Once regulation is in place, we'll see a surge in US dollar stablecoins, more launches, more adoption, ultimately reinforcing the dollar's dominance. And the numbers don't lie. Just in the last 24 hours, stablecoins quietly added $1 billion. In the past week, they grew by $4 billion. This month alone, we've seen an influx of $7 billion. This isn't just crypto liquidity, it's the US dollar going on chain. From emerging markets to Visa integrations, stablecoins are fueling the next phase of US dollar dominance, and it's happening faster than most realize. If you've been following the stablecoin market cap, you've seen this explosion firsthand. This is not something to ignore. If you're an investor, especially in XRP, the best way to capitalize on stablecoin adoption is by looking at the underlying networks. The XRP Ledger, Ethereum, and Binance Smart Chain are key players in this transformation, and their adoption will only grow from here. Even industry leaders are reinforcing this outlook. One expert recently stated, "This is only the beginning. In a few months, we'll have stablecoin legislation, and the stablecoin arms race will go into full force." That's exactly why we're seeing an acceleration in regulatory discussions right now, and Ripple has been incredibly vocal about this. Earlier this month, they highlighted how over $220 billion in stablecoins are already in circulation. Just a few weeks later, that number has jumped to $235 billion. The market is expanding at a staggering pace. To unlock mass adoption, two things are needed: global regulatory alignment and reliable reserves with risk controls. RLUSD is already leading the charge in compliance and transparency. And let's not forget, Ripple has been ahead of the curve time and time again. They anticipated institutional DeFi before it became a major trend, and the same goes for tokenization. Stablecoins are set to bring trillions of dollars into the space, fueling rapid expansion. And speaking of expansion, keep an eye on Circle. They're making big moves in Japan, launching Circle Japan KK to drive digital finance innovation. With Japan's stablecoin market heating up, this marks a significant milestone in real-world stablecoin utility. Now, if you're familiar with SBI, you know they're one of Ripple's biggest supporters. They've already partnered on initiatives like SBI Ripple Asia and DLT infrastructure development. So, with Circle entering Japan's stablecoin market, I wouldn't be surprised if Ripple and SBI announce an RLUSD initiative soon. The takeaway? The stablecoin market is on fire, and we're about to see trillions of dollars move on-chain. This shift will reshape major networks like Ethereum and XRP Ledger. If the current rate of growth continues, imagine where we'll be in just a few years. Billions moving into stablecoins today would have been headline news a few years ago. Soon, we'll be talking in trillions. The market is heading for a multi-trillion-dollar valuation, and major players like XRP are poised for exponential growth. So stay informed, stay ahead, and don't ignore what's happening right now. If you enjoyed this breakdown, don't forget to like, subscribe, and turn on notifications. Follow me on X for more updates. The link's in the description. This has been Sam. Thanks for watching. Peace out.